I don't know how to see if you can hear or see my screen, but if you could go over to Twitter, help me out here because I can't tell if you can see me and I can't pull it up on my end. Am I streaming right now? Thank you, Tom. Can you hear me? Can you see the full screen? I guess that's really what I need to see. Like, can you see my entire screen? If I do that, because I can't pull it up on my side. Is the full screen, like you can see the entire price axis and the time axis, correct? Awesome. Thank you. Thank you very much for your patience and help. All right, so I'm gonna just start paying attention here and we'll see what we see. I like the idea of the Sunday gap being revisited so far, but not rushing anything. No news this morning, so I'm more interested in getting acclimated to the live streaming. That way it can be a little bit easier for me to navigate. Let's go into there's the gap opening on Sunday. That's what I was referring to in case you didn't see the tweet I posted on Twitter. Usually, not always, usually, if there's a gap opening on Sunday, it likes to go down there and revisit it. It doesn't necessarily have to fill it entirely, but I'd like to see it at least show a willingness to get down there. The interesting thing about what I'm looking for is, should it trade down there, does it react strongly like a support idea? Like, does it send price vertical after that? Because if that's the case, we would be looking for levels like that, like in tomorrow or later in the week. But that's a little too much for right now in terms of forecasting. So all we're going to do is just study a little bit about how prices are reacting this morning without any news. And if you're commenting to me on Twitter or on the chat, I can't see you because I'm more interested in making sure I'm learning how to make sure this live stream works. All right, small little gap in here. Not something that fits the model yet, but I'm noting it. We have relative equal lows here. We just cleared that out. dabbled last night. You can see I used Friday's high here. The sell side in here. That's that. $2022, baby. Everything ICT would never do. Yeah, we're gonna see about that. Let's see. So there's a little bit of buy side up here. This is what I was watching to see if they're going to try to make an attempt to sweep into that again and then maybe run for the gap on Sunday. That was one of the things I had in mind this morning, but it hasn't shown any kind of willingness to want to do that. It remains heavy, so sell side rests below here and then into this area here. Just cycling through lower time frames. On days when it does not have high impact news, you're going to want to make sure that you resign yourself to just looking for the 930 opening volatility to give you any framework. When there is rather high impact news, we can use 830 to set up framework that would likely give us some foresight into how the 930 in the morning volatility may serve us. So one of the things that I want you to observe here is, number one, we've had Friday's highs taken out here. We swept above it, broke down, small little gap in here. Okay, notice the time of day here. It's 2:20 in the morning, New York local time. And again, if you don't have your time set to New York, it's going to be very confusing for you. We have swing low, broken, fair value gap, traded back up to Friday's high, and here is the gap. So here's the model working in London. It breaks down, small little Judas swing here at 4 o'clock in the morning. The sell side resting below here, and inside this little bit of an imbalance. But in my thought process is yes, it went down into here, but this is, in my opinion, the more significant price factor. That's why I tweeted about it this morning. Now, some of you may be thinking, okay, why aren't you going short? Because I don't have a setup that would give me framework to provide the risk model. Right now, it's important for you to just see, does it draw to areas that make the most sense? Not every single day are you going to be pushing a button. Especially right now, you're learning. You're trying to read price action. You're not trying to get in there and push a button, try to make money. Some of you are in a hurry to do that, and you're really cheating yourself in the learning process. Watch this low here. Sometimes price will just stop short of a short-term low and like a long candle like this, it can come back up and just touch it and roll forward and get into the liquidity you're looking for. So far, it's one-sided this morning. You're not trying to take any trades. You're observing, folks. Some of you already probably got 10 contracts short trying to get rich. I see these going long. I see these going long. He's going short. Let's get in here. All right, retail will see this right here as support, broken term resistance. If it's going to come back this far, I'm thinking watch this area here. It does not need to fill or even return back to Sunday's gap. That's just what I'm watching this morning. I'm having you consider the same thing because there's no real news this morning. We're not trying to play any volatility. Just tape reading. We have high impact news tomorrow. If my memory is correct, I think it's PMI numbers and housing, but don't quote me on that. I know I've never seen it, but it may not be tomorrow, maybe another day. So the question you might be asking or thinking is, do I just simply not trade on days where there doesn't show a high impact news event or a medium impact news event on the economic calendar? And what economic calendar am I using? You can use just about any reputable economic calendar. There's not really any specific one that's going to be better than the other, in my opinion. It's just a matter of how they deliver the. Like I'm obsessive, so I like things a certain way, and there are some calendars that give the same data and time for events being released, but because the way they present it, it just doesn't. Like right now, some of you are hating the fact that my charts look like this color now. Go back to the black and green and the white background. I would love to. I would love to do that, but my eyes are failing me, and I have to do what I can to protect them. So this is more comfortable for me to look at. So please don't send me any posts in my comment section on my videos or on my Twitter asking me to go back to that because I can't. All right, so we move back up into our fair value gap here. Now you want to study and see, does it respect that? Because if it goes through it, then we're going to be looking for a deeper run to get to the buy side here. Again, resist the temptation to want to push the button to get in. You're learning how to do this. Okay, you're not learning how to gamble. You're not trying to get in here and push a button and see what happens. You're studying price, watching, seeing what it does. Does it show signatures that repeat? Is there any logic to the market this morning? Is it trying to get somewhere in an obvious manner? So far, the only thing it's done is return back to the fair value gap. Now, if you want to, like, I guess, how would you study this? Like, this is like a walk forward, not a back testing, but it's a walk forward. Study from the point at which it touched the fair value gap here. Note the time that it did it, and how long does it take, if at all, because it could just run right over top the fair value gap and run into the buy side I have here. But I want you to think about how much time it takes for price to move away from either above and invalidate that fair value gap, or move away from it and run into the Sunday gap. Looks a little too overzealous in here. I would have rather seen it come off that and go lower. traders are waking up and seeing how equities are firmer from last week. So that kind of builds in the idea that, hey, maybe it's time to buy. And they're going to utilize that sentiment this morning. No real economic data to key off of, but hold on a second. Okay, we have complete closure of the fair value gap. Now, on days like this, with no news, okay, these are the types of things that some of you are just, you don't want to be met with this type of data, but you have to see it. You have a day with no economic news. You have no drivers for the calendar saying that high impact or medium impact news events should transpire. I'm teaching you to be mindful of the Sunday gap opening. That usually acts like a magnet. It draws price. It doesn't necessarily mean it's going to go there immediately on Sunday's trading or Monday's trading. Sometimes it'll be revisited later in the week. There isn't really a rule that says it has to come back by a specific time. But right now, looking at this, I want you to study how much time it's spending in this fair value gap. And let's assume for a moment that you did take that fair value gap as a short for Sunday's gap. Look where it's drawing to now. Do you feel comfortable on a day where there's no economic data? Nothing really that's setting up a volatility that would be one-sided? Mm-mm. There's no strong one-sidedness for the market to push, other than just to keep pushing the idea, the narrative that it's bullish. So we're above the fair value gap. You wouldn't have to take that stop loss right there. Look for the buy side above these highs right in here now. Knowing what you're looking for keeps you out of trades that would be marginal. And knowing what you're looking for when there's an economic calendar behind you with volatility sets the stage for manipulation. One of the hardest lessons for me to beat into students' minds, I found, is teaching them how to know when not to do something. That was the lessons I wish I would have learned early on in the early 90s. There's many ways to make money, lots of ways to make money, but there are just as much, if not more, ways to lose it. And if you understand the conditions in the marketplace that will invite those environments or circumstances in your trading, in other words, how do you differentiate what day to trade? Well, number one, the economic calendar. I'm looking for a medium impact or high impact news event around 8:30 or maybe at 10 o'clock, something to that effect, because I know they're going to utilize that for manipulation. So if they have no real economic news being released that day, generally, not all the time, but generally, you're going to have a lackluster trading session. So that means, is that a day where you would put in your typical risk if you're going to take a trade? Or would you elevate your risk and take larger trades? No. First thing would be justifying whether or not you should be taking any action at all. That means demanding the price action be absolutely pristine, seeing exactly what you're looking for, a very clear level to react to. I was looking for Sunday's gap. I want to see that be drawn to. We got down below short-term low here, but right from the opening, it's just more or less been a drop down to take sell side out. Now buy side is the next likely candidate for a run. These highs over here look a little suspect as well, so just be mindful of that. And there's some, I guarantee I don't see it, but I know there's some trolls in here thinking, oh yeah, well, it's going up or down. Anybody can do that. No, I'm teaching you how to read, how to stay out of the marketplace. When is it a good time to be trading? When is it 50-50? When is it not likely to present something that's high probability? And I've already executed overnight, so I'm already, I'm for my liking. And you're probably asking, well, why didn't you wait for it to go down to the Sunday gap opening? If you sold short up here, why'd you take a profit early and not run the Sunday's gap? Because that's one of the things that I'm kind of pushing to you now. There is no high impact news today. There's no impact on medium or high end. So I'm going to take the easy low hanging fruit if I'm in a position getting short up here. There's sell side below here, and here, and here. But it is likely to do what? Look what this chart's showing right now. Look at all the data that I have right now. Is it bullish? Is it bearish? Or is it consolidating? It's consolidating. It's sideways. We're firmer. We're higher than we were, obviously, on Friday. And it's building in a bit. So it's trying to draw price higher. It's squeezing on shorts. A lot of people are hoping this thing goes to zero. It's not going zero, folks, but I'm just saying that they've been extremely bearish because they watched Friday go down. So anyone that's been short prior to Friday, their trailed stop losses are on the menu. Just taking a look at the dollar index. Took out that short-term low. Looks like we could go a little bit lower on dollar. There's a small 15-minute fair value gap on dollar. I'd like to see it go through that to the downside, and there's relative equal lows on today's lows. I want to see it penetrate that. If it does that, that gives us lift for the index futures to go higher. So dollar lower opens the gates for higher prices on index futures, because that would be a risk on scenario. Watch that fair value gap in here. The bond market's not doing anything today. It's quiet too. Now, assume you just open your computer up. You haven't watched any of this price action. You haven't referred to anything. You're sitting down in front of your computer. You're looking at the market. You're looking at this particular market. Ask yourself, is there anything that stands out as obvious? Is there anything that would set up the stage as a one-sided move, either higher or lower? Because we have both conditions here. We have clean highs. Only thing going for it is we already took out Friday's high and we already broke down. From this dealing range high, this dealing range low, we're still inside that range with all this price action. Nothing has broken to the upside or downside. We're still inside the dealing range that was set by overnight London trading. Here, this low, and this high. And the question is going to be, what do you mean by dealing range? Okay, a dealing range is where market structure has provided a means for a trading opportunity and has moved outside the boundaries, which would have been this low and Friday's high. So it ran above Friday's high. It broke intraday low here, there. Watch the fair value gap now because we took liquidity here and here. So it could come back up and revisit that. If it does, study and see if it has any kind of sensitivity there to go then down into Sunday's gap. But back what I was saying, we're inside the dealing range between the high here that was piercing Friday's high. So Friday's high was taken out here. It broke down. It gave a logical setup, as I mentioned earlier in the stream. Sell side, you can see again, I operated and engaged with that logic. Now we have this low here. So the significant sell side is here, but below that, where would it want to reach to if it goes there into Sunday's gap opening? Let me scrunch this up. There's Sunday's gap opening. So sitting down in front of the computer, the first thing I'm looking for is how did we trade overnight? Well, we took Friday's. Let's assume I didn't do anything in London. I'm looking at how it went above Friday's high. It broke down. So we have built in, we have the advantage of Friday's taken buy side. So in other words, the high on Friday's taken out. We've broke down internally on the intraday. We rallied once here, didn't get back above Friday's high. We rallied here, we failed. Failed, it went lower. Then we rallied again, swept 1, 2 highs on buy side. Wasn't able to get the buy side liquidity here. We have sell side below this low and this low. So if it goes for this sell side, doesn't it make sense that we want to reach into Sunday's gap? Now, with that logic, which is, in your opinion, and I'm going to have to see this on Twitter, just respond to me, send me a tweet with a number 1. Right now, it's at 1 minute to 10, so 9:59. Is it more likely to take the sell side out or the buy side right now? Some of you are already pushing the button. I'm selling short. Don't do that. You're cheating yourself. I'm not going to be doing cryptic messages to try to give you signals. I'm teaching you how to read price. I'll push some buttons on the demo in front of you, but it's got to be the right setup and framework. I'll teach you how to manage the pseudo risk in it as well. Think about what the public is thinking. They woke up this morning, they're looking at the equities opening. It's up. It's up from Friday's close. It's going up a little bit, a couple minutes ago. So they're thinking what? It's going higher. They want to do what? If they think it's going higher, what are they going to be doing? They're going to be wanting to buy. So if they're going to place buy orders into the marketplace, where are they going to put their stop losses to protect their long positions? Underneath recent lows, right? That would be here and here. And when the logic is the markets want to, sometimes, most of the time, want to fill in those Sunday gaps. You see that? Look at the gap, discount low. In other words, it's the lower end that frames the gap. What's this candle's high? 39.34.50. I told you to watch the fair value gap. What's the high on that candle? 39.34.50. You cannot beat perfect. Where did it trade to? Sell side. So if it's going to take that, where's it going to go into? Sunday's gap. So now you want to study, does it go into the entire closure of the gap, which would be right there, that high. So 39.04 even. You want to have that level on your chart. We'll take the shaded part out. I'll just drop a line on it. Okay, so it needs to look like that. Now for your notes, if we trade below a Sunday gap and trade back up to it, sometimes it'll act as resistance. So you can look at that and study that going into the afternoon session, which I won't be with you for. We're going to close the stream here in about 5 minutes or so. So when you're watching price and studying and going through your charts, looking at the things I'm teaching you, this is what you're doing. This is tape reading. You're observing. This is where all of you, since January when I first started doing this mentorship for free on YouTube, this is all you should be doing. If not this, you should be obviously spending your time on the weekends back testing and studying old data. Not doing it with live data, but observing once you've done a significant portion, because I know a lot of you have already started in January with the things I've taught. So you're going through your charts and you've seen lots of examples of it. So now what you're doing is the next stage is to do what we're doing here. So if you're new, if you just started following me, don't do this part. So I'm not trying to, confuse anyone. Obviously, I'm working forward with the people that have already started with me in January of 2022. At this point, right about now, because you should have done enough back testing and convinced yourself that this pattern exists, it's there. Now, going into the live markets and studying it forward, notice that there's no paper trade entry, there's no demo entry, there's no pursuit to get into a live trade. You're going through the motions of looking at the circumstances that lead to high probability. Does the market give you insights based on the economic calendar that there's going to be volatility in the marketplace? That's going to be in the form of either a medium impact or a high impact news driver, some kind of report, some kind of data point that comes out. Since there's an absence of that this morning, we're resigning ourselves to relying solely on price action. So solely on price action, it needs to be perfect. It needs to be a perfect one-sided setup. Whereas right now we had both sides offering buy side and sell side. And what I outlined was it has already done a run on buy side overnight. And London tends to make the high of the day or the low of the day. Not all the time, but largely you find that's the truth. If it's going to be a directional market for that particular trading day. Because we have no real data points coming out on the economic calendar, that should immediately reduce your interest to saying, okay, it's probably going to be a small range day. It won't be one of those big, large range days. I'm not saying it can't do that. I'm speaking in terms of probabilities. So if it's less likely to be a large range day where it's one-sided, we don't go in with our guns blazing, trying to shoot at everything that looks like a fair value gap. Demand it do something obvious. Okay. So the only thing I did with you this morning is sit down and give you the logic that it was more likely to do a run to the gap because of overnight run on Friday's highs. And again, for those that are just getting into the session, the only thing I pushed a button on today was here. And then covering the whole show there. Okay, so I was looking just for this little pool of liquidity right there. That's all it was. So when you look at these arrows, don't think I got out at that low. Look at the price. 39.30 and a quarter. Okay, so that's right about there. That's right in that low. That's all I was aiming for. I didn't want to hold it because we don't have any data. There's no economic high impact or medium impact news events this morning. So it could do what we saw here. It went a little bit lower than where I got out. Who cares? I don't care. And the setup that I was looking for was just kind of like what I was outlining this morning, is we want to see price draw down into this gap. And it has done so. So did it completely close in the gap? No. Does it need to close that gap? No. So take away this in the whole lecture today. Which pool of liquidity had more energy drawing price to it? These relative equal highs, which are absolutely something to be mindful of, because it could very easily just return back up in there when it was doing this run. But we've already done the work of running Friday's highs overnight here. Then we broke internally the market structure here. So all of this retracement back into this high to that low. I saw Hannah's video. Hello, Hannah. I'm going to give you something in Tuesday's video specifically that I want to highlight in your video. I'm not going to play your video, but I'm going to go to the minute marker and show something that you said. So I want to help you out in there and help your viewers and mine as well. But the dealing range high and the dealing range low here, that's the range that you're looking for to look at the relationship between premium and discount. So if it's just, I guess we'll just do it. There's 50% or equilibrium. Okay. So if you're looking for a draw on liquidity down here, you want to find your dealing range. Dealing range is the high formed overnight down to the low prior to the session starting. 8:30 news embargo. Well, there is no news today, so we have to go what? Go right to 9:30. So at 9:30, right there. Well, it's on a 4-minute chart, so it's a little wonky. The idea is you want to see, does it have a fair value gap in a premium market? What's your dealing range? Overnight high and the low that broke structure over here. So everything now, the framework is in play for a short into this area if there's a fair value gap that forms at equilibrium or above it relative to this range high and that low. That's the fair value gap I mapped out. We went through it, yes. We're not trying to rush a trade. We're not trying to do any of that. We went above it, see if it takes this buy side, because if it would have done that and then broke down and offered a higher fair value gap, I would have mentioned that. It didn't do it. It started breaking down. I said, okay, watch the fair value gap. Went through it, came back up, bumped the same level high. Again, look at the high of this candle. You're looking at this price up here, folks, in case you don't know what I'm looking at. This candle's high, 39.34 and a half. We went back through it. This candle here trades right back up to that same price level, 39.34 and a half. Watch and see if it respects that fair value gap. Does it? Yes. Where does it go? Sell side, into the Sunday gap. This fair value gap, is it at a premium or is it a discount relative to the dealing range high here and here? Premium. The fact that it's not so pretty, it's not so textbook, it's not so, well, it doesn't look like what he talked about in that one episode. Okay. I see some of your comments, and I believe some of you are actually sincere about your doubts and your concerns. But not every single trade is going to look identical. They're going to be very similar, but this is a day where I'm trying to teach you. Now, this is the main thing. Write this down in your journal today. We watched price deliver to where we were expecting it to trade to. The ideal scenario was Sunday's gap opening. It traded to it. I put into a fair value gap. I explained how the market is more likely to go to the gap than to the buy side, but let's watch and see if it takes the buy side. No trade was offered. No setup was an entry. And I talked about how this day, because there's a lack of news, is that high probability? No, it's a low probability. So that means you have to demand more from price action. Some of you, if not all of you, that are new would have never been comfortable watching price go back into that low end of that fair value gap and expect this. But when we were dropping down, I said, watch the fair value gap. $39, $34.50. Perfect delivery back to the discount low that makes the low end of the gap. Then it delivers to this low, and into the Sunday gap. On Twitter, I tweeted my interest was that gap. So your question is going to be, if you're not trading, what are you doing? This is what I'm doing. I'm studying. 30 years of experience is only useful if you're staying active. You want to keep your skill set honed. So even if I'm not trading, I'm still studying price because it keeps me dialed in, because I have commentaries and things I have to lead students in the right direction. So I keep myself plugged in to price action, even if I already know I'm not taking a trade. I have no interest in taking a trade. Those days are relegated to the days I know that there's no high impact or medium impact news events. So if you want to have a day, or let's say a trading week, where you want to plan a day off with your spouse or significant other, choose a day that doesn't have high impact or medium impact news and just give yourself that day off, and then go back and back test it later on. Who cares if it has a big move that day? Chances are it's not likely to do that. And don't think that you have to be in every single trading day. You don't. There's a lot of times where I'm not interested in a whole week of trading because the type of news drivers. And that's okay, because I know that these things repeat enough. I'm not in a rush. I'm not afraid of missing something. And that's the importance of how I teach. I take my students through a very boring first 6 months because you're actively trying to go in and push a button. And I know, because you're thinking this is a video game. Folks, this is not a video game. This is an invitation to the financial graveyard. If you walk in there looking for a hole to fall into, there's lots of them. Lots of that opportunity. There's lots of people out there teaching you how to push a button and get into a trade. There's no one teaching you how to avoid trauma. None of those factors are ever touched on, because 99% of people out there that are trying to teach, they are not profitable traders. They're doing something that's silly. They're either doing something that's manipulated, showing you fake results, or they're doing with a market replay type scenario. If they know how to do it, they're going to call it and outline it and give you the logic why it should do what it should be doing. And that's what I'm showing you here. When you sit down in front of your charts, you need to be thinking like this, asking yourself questions like, okay, if I was in the market right now, would I be wanting to take a trade? And if I were, would I be wanting to go long or short? What would justify me being long or short? And vice versa. As soon as you get to that conclusion about what you would want to do, start looking at it from the opposite side and journal that discovery, because you're going to see how, when you look at price now and how you're going to look at it come December, around Christmas time. I promise you, folks, I promise you, you will see things in the chart that you're not observing right now. And it's going to be clear to you come December because you've put in months of reading the tape like this, studying it. All right, now, in this circumstance, I'll leave you with this, okay? We have traded down below the sell side here and here. We have an imbalance right there. That might be a factor that could send us one more time deeper into the Sunday gap. If we rally back above this gap here, think of that like a mile marker that it should not go back above that. If it does, it could act as support there and send us into the buy side and maybe even deeper here. Study it. I'm not saying it's a trade, okay? But as long as we stay below this imbalance, the likelihood is we could move between this range low and whatever high forms here, and it would likely become a little bit heavier to trade into that gap entirely. Should we trade into that gap and go below it, watch that in the afternoon session between 1:30 and 4 o'clock. That might be an area to study for the afternoon session. And I think that is going to be it for today. I don't want to give you too much more than that because, again, it's a day where I personally would not be involved in, but I want to give you the reasons and the logic as to why I wouldn't participate in it. It's not enough for me to say, well, that's a day I wouldn't have traded anybody, and sound like a smart guy. I'm telling you the reasons why, so that way you can use that same logic going forward and hopefully present the opportunity for you to have a life outside the charts. Even though the markets are trading, it doesn't mean go in there, I got to get in front of these charts and push a button. No, you don't. Who says you got to do that? The gambler inside of you says that. Okay, so you want to keep the analyst in the driver's seat, okay, and keep the gambler out of it. He's got to be in the back seat, or she's got to be in the back seat. Don't invite them to drive because they'll steer you right into a tree. All right, so we're back into that fair value gap. We're above it, so think here now, okay? And we'll study in hindsight on Twitter. I guess I'll post something later on this afternoon. I have lots of work. I get it done with my private group. Hopefully you found something here today insightful, and I will try to do this again tomorrow around the 8:15 time period. We'll meet again, okay? Till I talk to you next time. Be safe.